The well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
Did you catch that? One of the world's most successful investors, Warren Buffett, has just revealed a game-changing strategy. The quickest route to a $10,000 monthly dividend income. But how does he do it? What are Warren Buffett's time-tested strategies for dividend investing that have stood the test of time? Can you guess which top dividend stocks Warren Buffett personally favors for his portfolio? And most importantly, how can you follow in his footsteps? Stick around, because in the next few minutes, we'll reveal the answers to these questions and uncover the financial secrets of one of the greatest investors of all time. Yes, today we're diving deep into Warren Buffett's playbook to uncover the strategies that have made him a billionaire and discover the top dividend stocks that he recommends. So, grab your notepad and pay close attention, because by the end of this video, you'll have the keys to potentially earning $10,000 a month from your investments. Now imagine this. While you're catching up on some much-needed sleep, sipping on your morning coffee, or enjoying a fun outing with friends, money is quietly flowing into your bank account. Sounds like a financial dream, right? Well, it's not just a dream. It's the remarkable power of dividends.
I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically.
Those are the words of Warren Buffett, an investing wizard renowned for his extraordinary wealth and financial wisdom. He doesn't chase quick gains in the stock market. Instead, he follows a strategy that involves investing for the long term while earning consistent income through dividends. Now, let's break it down. Dividends are like your personal financial gifts, often paid out by well-established, profit-generating companies to their shareholders. These payments represent your share of the company's earnings.
I bought my first stock when I was 11 years old. It was the first quarter of 1942, shortly after Pearl Harbor. I spent $114.75. Three shares, $114.75. If I put that $114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today. The answer is about $400,000.
Warren Buffett's message is crystal clear. If your money isn't working for you, even when you're catching those much-needed Z's, you might be missing out on one of the most potent wealth-building tools available. Now, let's dive even deeper into how dividends work and how they can potentially help you earn $10,000 per month. Imagine you invest $10,000 in a company's stock that pays a 5% dividend yield. That means that this company gives back 5% of the stock's price as dividends annually. In the first year, you'll receive $500 in dividends. This is your initial reward for being a shareholder. However, the real fun starts now. Instead of spending those dividends, you reinvest them by buying more shares of the same company's stock. Now, not only do you own more shares, but also set the stage for an incredible financial phenomenon called compounding. Compounding is like planting a money tree. Your earnings generate more earnings, and over time, this can lead to exponential growth in your wealth.
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
In the second year, let's assume the stock price hasn't changed, but you now own more shares because of the reinvested dividends. So, you have more shares and consequently, you receive a larger dividend payout. You receive $550 in dividends in your second year. Notice that this amount is more than what you received in the first year. This is because your dividends are now calculated based on a larger investment. But the real magic happens over time. In the third year, you have even more shares, and the 5% dividend yield applies to an even larger investment. You now receive $575 in dividends in the third year. This trend continues year after year. Your dividend income grows not only because of the increasing dividend payments, but also because you keep reinvesting those dividends to buy more shares. The result? your dividend income starts to grow exponentially. It's like a snowball rolling down a hill, picking up momentum and size as it goes. Here's the exciting part. This strategy can potentially lead you to earn $10,000 per month from dividends. How? Well, your initial $10,000 investment, when combined with consistent dividend reinvestment and the power of compounding, can grow into a substantial sum over time. While it may take some time to reach that $10,000 per month mark, it's entirely achievable by selecting the right dividend-paying stocks, having patience, and staying consistent with your investment strategy. Let's put it into perspective. If you started this journey today, aiming to have $10,000 per month in dividends by the start of your 30th year, and assuming an annual return of 10%, you would need an initial investment of approximately $21,886.60. Now, that may sound like a significant amount, but it's a tangible goal to work towards. This example demonstrates how dividends, when harnessed wisely, can be your pathway to financial success. This is how dividends can be a game changer for your financial future. When you invest in dividend-paying stocks, you're essentially becoming a part owner of a company. And when that company makes profits, it shares a portion of those profits with its shareholders as dividends. The man himself, Warren Buffett, who ranks among the wealthiest individuals globally, attributes a significant portion of his wealth to dividend investing and the magic of compounding. So, the next time you hear the term dividends, remember, it's not just about receiving a paycheck. It's about nurturing your financial future, securing your dreams, and building lasting wealth. Now that we've discovered the incredible power of dividends, it's time to learn from the master himself, Warren Buffett. How does he approach dividend investing? And what are the strategies that he swears by?
We don't regard what we can get on short-term rates now as adequate, but we'll still bend a little bit and start settling for lower rates for 30 years because rates for 30 days are so low. We would rather just sit it out and wait a while.
Warren Buffett's strategy is simple yet brilliantly effective. He advises us to focus on businesses with durable competitive advantages, companies with economic moats. What exactly is an economic moat? Well, think of it as a fortress that protects a company from competition. Companies with economic moats have something unique, whether it's a strong brand, proprietary technology, or a dominant market share. This allows them to maintain their market position and profitability over time. Buffett's investment philosophy encourages us to look at a company's past performance and the strength of its competitive position as indicators of its future success. This is a stark contrast to chasing after the next hot stock or trying to time the market. Warren Buffett's strategies isn't about quick gains. It's about investing in companies that have a track record of stability and profitability. It's about thinking long-term, just like he does.
If, particularly during bull markets, in stocks it's so easy. It's easier now than ever because you can do it online. Just you click it in and maybe it goes up a point and you get excited about that and you buy another one the next day and so on. You can't make any money over time doing that. But if you had a punch card with only 20 punches, you weren't going to get another one the rest of your life, you would think a long time before every investment decision. And you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to.
Patience, a trait Buffett emphasizes, is essential. Successful dividend investing isn't about constantly buying and selling. It's about holding on to great companies and letting your investments grow over time. Warren Buffett's approach aligns with his belief in the intrinsic value of investments. Instead of being influenced by short-term market fluctuations, he focuses on the long-term value a company can provide. So, the next time you consider an investment, remember Warren Buffett's wisdom. It's not just about the price. It's about understanding the true value of what you're buying. By adopting these strategies, focusing on companies with economic moats, thinking long-term, and recognizing the value in your investments, you can walk the same path that has led Warren Buffett to legendary success. Now that we've absorbed Warren Buffett's dividend strategies, let's get to the heart of the matter. which dividend stocks does the Oracle of Omaha personally favor for his portfolio? These are the stocks that align with his time-tested principles and have stood the test of time.
We like the companies in which we have investments.
Number 1, Apple, or AAPL. One of Warren Buffett's standout investments in recent years is Apple. Apple is more than just a tech company. It's a brand powerhouse with a massive, loyal customer base. Apple began paying dividends in 2012 and has consistently increased them since. Its stability and growth align with Buffett's temperament as a long-term, value-oriented investor. Number 2, Coca-Cola, or KO. Another classic Buffett pick is Coca-Cola, a company he has held on to for decades.
If you buy Coca-Cola today, the company is selling for about $110 to $15 billion in the market. The question is, if you had 110 or 15 billion, you wouldn't be listening to me, but I'd be listening to you incidentally. But the question is, would you lay it out today to get what the Coca-Cola company is going to deliver to you over the next 200 or 300 years? The discount rate doesn't make much difference after.
One of the most critical lessons we can learn from the Oracle of Omaha is the importance of a long-term approach. These words, forever, echo in Buffett's investment philosophy. He isn't interested in short-term gains or quick trades. Instead, he's all about holding on to great companies for an extended period, even indefinitely. Coca-Cola is a dividend aristocrat with a long history of raising dividends year after year.
Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all.
Coca-Cola's iconic global brand and enduring popularity make it a reliable income generator, which resonates with Buffett's investment philosophy. Number 3, Verizon, or VZ. Verizon, a telecommunications giant, enjoys a stable and growing customer base, making it an attractive choice for dividend investors. Buffett's emphasis on knowing your investments inside and out aligns well with dependable revenue streams that telecommunication companies like Verizon typically offer. Number 4, Bank of America, or BAC. Warren Buffett has a substantial stake in several major banks, including Bank of America. Banks often pay decent dividends and can be an attractive option for income-oriented investors. Buffett's legendary patience suits the banking sector, which often requires a longer investment horizon to fully realize its potential. Number 5, Johnson & Johnson, or J&J. Johnson & Johnson, a healthcare giant with a diversified product portfolio, is known for its consistent dividend payments. Johnson & Johnson's reputation for value aligns with Buffett's focus on quality investments. These are just a few of the companies that Warren Buffett has chosen to invest in, and that can potentially become pillars of your dividend-focused portfolio. They are all grounded in Buffett's principles: investing in businesses with competitive advantages, taking a long-term approach, and recognizing the value of their investments. As we wrap up our journey through the wisdom of Warren Buffett, remember that the best investment you can make is not just in stocks, but also in your knowledge and understanding of the financial world. Your financial journey is just beginning, and the lessons you've learned today can be a catalyst for a brighter financial future. As Buffett once said, the stock market is filled with individuals who know the price of everything, but the value of nothing. Be the investor who understands the value and unlocks the potential of their investments. Until next time, stay patient, stay informed, and stay on the path to financial success.